Welcome everyone. This is an Easy Properties webinar. I am your host. My name is Standwa Nongauza, and I'm actually joined by my teammate at Easy Properties, the man behind the whole thing, the whole shebang, Rupert Finnemore. Rupert, can you give everyone a greeting?
Hello, Stans. Hello, everybody.
So guys, essentially what this whole chat is about is we just wanted to catch up the whole community on what's happening on Easy Properties. From IPOs to auctions to other stuff that's happening around Easy Properties. We just wanted to chat with you guys and give you an update. And I just wanted to ask that everyone, please ask your questions on the Q&A portion of this webinar. Yeah, so I think, Rupert, we're sort of ready to jump into it. And I understand that you had some stats you wanted to share with us.
Yeah, thanks, Stans. I thought it'd be a nice way to start off the webinar today, just sharing kind of some of the progress that we've made over the last while. And so while we launched, when was it, June last year? I know it's difficult. Lockdown years are a little bit like dog years. It's like 1 year in lockdown is like 7 years or something. But anyway, I mean, so far we've had 83,000 people register for Easy Properties, which is extraordinary. We've had over 24,000 people register in our different properties, which I absolutely love. You know, that's largely 24,000 people that would have never had the opportunity to invest in property any other way. So I'm very proud of EP and the whole team that have kind of made that opportunity available. And interestingly, those 24,000 people have now invested in over 113 million rands worth of property, which is fantastic. Yeah, 2 big thumbs up. So it's 113 million rand already. It's just over 100 individual units, which is amazing. Which is awesome for the first year. And I mean, you know, we're ramping things up. So in the next 3 months or so, we've got another 72 million rands worth of property that's coming onto the platform. So yeah, really interesting. I think as well, what I'm really pleased about is the ratio of women to men is steadily increasing, which is lekker. I think when we initially started, it was about 70-30. 70-30 male dominated, and it's now the ladies are taking some places back. It's now sitting at about 66-34, which is awesome. So that's an interesting one. I think what's also interesting, I was reading an article this morning by a guy by the name of Rudy Botha. He's the CEO of Better Bond, you know, one of the bond origination companies. And he was sharing an article, well, it was his article, but he was sharing some of the Bank of America's recent survey around property. And it was just really interesting from a Generation X point of view, how over 50% of all of the people that the Bank of America surveyed that were in that Generation Z, you know, so what's that, 18 to 24, over 50% of all of those people said that they were already saving for their first property, which was really interesting. And I think especially after, you know, the millennial generation is largely known as the generation rent. And there are a couple of reasons for that. And one is lifestyle. We all know that you millennials like to go traveling and do amazing things. And sadly, a lot of millennials have got quite a lot of student debt. And so they largely kind of paying that stuff off and paying for holidays and stuff and renting out properties. Whereas this Generation Z, these 18 to 24-year-olds are much more entrepreneurial, much more taking far more kind of greater risks in the workplace, not necessarily going the traditional study way, you know, 3 and 4 year degrees, or in my case, a little bit longer than that. But yeah, and again, looking to buy these properties. And so one of the interesting things I know that you share with us regularly, Stans, is the demographics around the age.
Yeah.
And by far the biggest, and so, yeah, there are 2 points I want to make, but by far the biggest group of investors are guys under the age of 35. So over 40% of all the people that have invested in EasyProperties are under 35, which obviously will cover quite a bit of that Generation Z. But I think what was really cool for me is that in thinking about that, while the kind of millennials are paying back all of this hectic debt and going on lack of holidays, there's the fact that EasyProperties has come about is actually allowing these guys to invest into properties, you know, even along with the kind of spiraling student debts and everything else that they got. So that was just like a really interesting tidbit for me as well.
And actually, Rupert, I want to get more specific about the age thing, because far and away the biggest age group or age number on EasyProperties is age 26. So that is far younger than you, but it's also younger than me. So
it's even younger than you, if you can believe it.
So I mean, that just goes to show like that the younger folks actually are being way more money savvy, and it's actually,
without a doubt,
it's so awesome that there's platforms like this to give people like us who missed that opportunity. So for instance, myself, I'm also trying to save for property as well. But 2 years ago, I didn't think honestly that EasyProperties was possible, and so now I actually can already start having my own property portfolio thanks to EP. So I'm actually just as stoked as a lot of the people on this call here to be part of this revolution.
Absolutely, man. I mean, if you think about it, if you've put in $100 or whatever, $500, I mean, the kind of average investment size, as we know, is about 1,600 Rand. You know, across the kind of 8 properties that we've launched, you've now got a healthy portfolio with a share in 100 units. I mean, that's just amazing in itself.
Nah, that's primo. That's awesome.
Yeah,
so
yeah, exactly.
I just want to say shout out to the EasyProperties team, you know, for making this possible. But beyond the EP stats, Rupert, now I want to jump into what's actually happening on the platform right now. So, for instance, we've extended this current IPO, the Polofields, and it's now closing on the 22nd of June, which is exactly a week away from now.
7 days, yeah.
7 days, man. And I just wanted to ask, so why essentially did EasyProperties decide to expand this this IPO?
Stans, it's for one reason and one reason only. The fact that the IPO wasn't going to get away in the original allotted time. You know, I think if it had been like an absolute dead horse, we wouldn't have flogged that dead horse. But there was obviously a lot of people that wanted to still invest in the IPO and for whatever reason weren't able to. And so largely it was in response to our community asking for an extension of time on one aspect and just giving ourselves a little bit more time to get this one away. It's by far and away the biggest raise that we've done on EasyProperties, and you know, just needed a little bit more time to get this one away. Simple as that.
And so Snetem is actually asking us, like, what is it that is closing in 7 days? And I just want to reiterate, Snetem, that it is actually the Polofields property. So that means your opportunity to subscribe for shares in this property expires in the next 7 days. If we do not get it to 100%, that opportunity for this specific property is gone. And so now I want to say or ask Rupert, what are the key things about this property that make it such an attractive asset or such an attractive opportunity, and why people need to go in within the next 7 days on this property?
Well, it's interesting. I think, you know, what are we sitting on? Close on 95% now. So, you know, I think the kind of the confidence that we have that this IPO is going to get away is obviously increasing. It's easy to say as you get closer to 100%. But I mean, you've been to the Polofields. I mean, it's you know, we've got 10 units there, luxury units. They're all 3-bedroom units. We've got a mix of ground floor and first floor units. So obviously, you know, like any one of these Baldwin developments, you know, primarily when you're looking at these property opportunities, largely, there's largely you want to look at the kind of rentability. Is this property going to appeal to tenants? That's the kind of EasyProperties play here. We're investing in different properties. We're collecting rentals, and then kind of paying dividends with those rentals and enjoying the benefits of capital growth, of course. But when you're investing in really beautiful product like this, and it was really lekker, we had Steve Brooks from Baldwin who took us through some of those units the other day. I mean, you'll know they really are quite magnificent units. That estate obviously offers a hell of a lot. It's got wonderful lifestyle estate. It's got spas. It's got indoor, outdoor gyms. It's got children's playgrounds. It's got a kiddies school that's been built next door. It's got everything you can think of: shops, cinemas, the works. And so, as a property on its own, it obviously offers a tremendous amount. I think from the EasyProperties point of view, we've obviously, with our property partners, the narrative guys who hopefully are on the call today, you and I are the looks of the operation. They are the brains. Yeah, exactly. But they've helped us kind of put together a really good deal here. So first and foremost, the people who invest in this property, we buying these properties at a 5% discount off what they are selling for already, and also against independent valuations. So we know that property, once it transfers, has theoretically already got a kind of 5% discount priced into it. It obviously offers a good yield as well. I mean, it's got a net yield of 7.8%, which is obviously a very attractive yield. And as well, I think for me, the biggest thing is that it's got 18-month rental guarantee. And so again, it's about investing and mitigating risk. So, you go and buy a rental unit somewhere, you take transfer of it. The bank doesn't wait for you to find a tenant, and you've got to start paying back your bond and all that stuff while you're busy finding a tenant. What's lovely about this is we've got a rental guarantee in place for 18 months from the developers, which just takes all the risk away. It gives us a guaranteed return, and it takes all that risk away from vacancies, guys not paying rent, all of that jazz. So that's one of the biggest factors for me.
And that's all down to like the brilliance of the investment committee and our partners' narrative, right? I mean, they were able to negotiate this.
Absolutely.
This awesome deal. So now a question from Vusi is, do we have exclusive rights to sell up developments properties?
No, the short answer is no. I mean, we've obviously got exclusive rights on those units that we invest in while we're busy raising that money. So it's not like they are going to be sold out from under our feet. But that Polofields, I mean, they're hundreds and hundreds of units. So we've got exclusive rights to those 10 units that we had kind of purchased, subject to raising the money.
Awesome. Okay, cool. So we haven't gone to the development phase yet, where a whole development is our exclusive territory, but it's specifically those units.
Yeah, it's specifically those units. I mean, there are some interesting things in the pipeline coming, which we can maybe talk about a little bit later. But yeah, no, we haven't taken on whole developments as yet. Okay,
cool. So, I mean, we've mentioned the Polofields and the great parts about it. We've also, in a few of our communications before, and I'm sure some of you would have seen it, is that right now in COVID, it's hard to find good tenants. At least that's what a lot of real estate agents are saying, especially in a survey that was run by someone somewhere. And so this actually ties to a question that I didn't catch the name, but that one of the people were asking on this call. They were asking, has COVID affected rentability? What do you think? Like, so in our experience, because we also actually, you especially have a hand in renting out the units that we own. Have you seen any kind of, I guess, change in the rentability of units ever since COVID, based on your previous experience in real estate and now?
Yeah. The short answer is yes. I mean, we know for a fact that out in the market, vacancies are up. I think what's great is that the number of tenants who are in arrears, I know that is starting to decrease. So that's something that's really positive. From an EasyProperties point of view, we've had one or two guys that are struggling a little bit, but our rental collections has been really good. It's way up at like kind of 98, 99%. Obviously some guys get into a bit of trouble, and we are sympathetic to that kind of stuff. But again, that's one of the reasons why the kind of investment committee are putting deals together that have these rental guarantees, because it just mitigates that risk 100%.
Perfect. And so what that then means for clients, if I can explain also, is people who come from Easy Equities know that dividends are a big thing. We love dividends. And so regular payments into your account, and this is how dividends work, by the way, on EasyProperties. So EasyProperties will collect rent from all of its tenants, and then that rent is then collected and distributed to investors. So that's actually what gives also EasyProperties an edge, if I can say also, Roop. Like it gives EasyProperties, it gives investors an edge in that they receive regular payments, which are quarterly. And so I would say it's a selling point for EasyProperties. I mean, wouldn't you also?
Well, I think it comes down to diversification, and again, managing risk. If you and I had the money and clubbed together and bought a single unit, and we managed to find a tenant on that unit straight away, and 3 months down the line, this guy could not pay his rent, then you and I have got to come up with the bond payments on that unit. So you've got all your eggs in one basket.
Yeah.
Again, as I kind of mentioned earlier, those of us who've put a little bit of money away in each of these different IPOs now own a share across 100 units. So if there are an occasion or occasions where someone can't pay rent, or a unit is vacant for a month, it means that we are still collecting 99% of the rent that is due to the various SPVs and everything. So it's a massive mitigation of rent. That's the benefit of the diversification that EasyProperties allows.
Awesome. Okay, cool. And so I want to jump in.
Maybe, Stans, what I'd like to maybe just say at that point is, we obviously outsource the rental management of a lot of our units. And what we've now recently decided as a business is that we are actually going to be managing these units ourselves. We've got a rental capability built up. We've got a very experienced rental practitioner joining the group now. We've got a very experienced rental administrator who's running the payments and collecting rents and all of that stuff. And it's for two reasons mostly. And that is, no one has got a bigger incentive than us for looking after our property portfolio. Outsourcing these things is all well and good, but no one's going to feel the sting as much as we do if there are challenges that come across. And so we took a decision based on a couple of circumstances to bring that management in-house. And I think it's working really well. And the thing, if you don't mind, I'm just going to talk about it now. One of the things that I'm really excited about is, I suppose, people who know the Easy Group know that there's always a lot of innovation and stuff that that takes place. And one of the things that we're going to be doing, we've got an investor community of already 23,000 people, 80,000 people that are registered. Yeah. No one has got bigger incentive than those people us included in those people, to look after those units. And so what we're busy creating, and that's going to be launched within the next month, is an online kind of platform, call it a marketplace or whatever. We're actually going to be exploring this whole gig economy, which is especially cool now in the times of people working remotely and from home. What we are going to be doing, as an example, let's just use Green Park. It's in Boksburg. A lease is coming to an end. we've partnered with this company that's got like unbelievable tech, and we're going to post a gig on our platform and say, listen, we need someone from our community to go and do an outgoing inspection or go and collect keys from a tenant or something like that. We will post those jobs there. We've got training and everything sorted out. We've got these amazing apps that help you do the inspections and everything. And the amazing thing is that we're going to be able to say to guys, listen, who wants to go and do this job? It needs to be done on the 15th of July. Here's the address, here's the person's contact details. And I see Lesedi posted something there. So Lesedi thinks, okay, cool. Well, then I'm going to do it. He's going to do the job. It's all tech-based. He's going to upload the inspection or whatever the story might be. And we're going to be able to pay Lesedi, a couple of $100 in EasyProperties cash that's going to go into his bank account or his EasyProperties wallet that he's going to be able to, again, invest into further properties. So I'm really excited about this. Lesedi as a shareholder in Green Park is going to take much more care and attention in looking at this unit and checking it out and make sure that there's no damage and what needs to be done to it to keep it spec'd up. And that's something really cool that's coming from EasyProperties soon, to kind of help our network look after our kind of joint assets, which is really cool.
Wow.
And some cash.
Wow. So that's actually amazing. So it's just part of the bigger picture, actually. It's not just about investors coming in. It's creating a whole kind of ecosystem.
Absolutely.
That's actually very cool, Rupert. I'm a big fan of that, especially with the youth unemployment rate as it is in South Africa. So dig it, man.
Yeah, I think that's going to be lekker.
So I actually wanted to jump into the next IPO that we have, and it's also currently on the platform as well. That is the Exchange Lofts, and they're based in Joburg. They're currently at 18.17% in funding. But I wanted to understand from you why we decided to list the Exchange Lofts.
For a few reasons. It's like an uber cool property. It's got that real kind of cutting edge New York loft vibe. What I really love about it is that it's just around the corner from our building. I can see it through the window here, right next door to the gasworks. And it just also taps into that really fantastic urban living on the edge of Braamfontein, Auckland Park kind of area. It's a beautiful old historic building. It was the old telephone exchange some time ago, which obviously guys have now updated into these beautiful lofts. They're double volume. Have a look on the EasyProperties platform. They are really cool. If I was your age, Stuns, that's where I would be living for sure. So they're beautiful properties. Again, it's around the rentability and the kind of returns that we can get there. Those ones we've bought at an 8.8% discount. So again, once we take transfer, it's a real great indication of the kind of capital growth we can enjoy there. And as well, those ones have got a year-long rental guarantee. Again, so it mitigates all the risk. I mean, I think we've spoken about that enough. And really, really beautiful, edgy, urban living, Josie living, New York loft style apartments. Yeah, really good.
You look, Rupert, I might take you up on that offer, and I'm gonna open a GoFundMe. So if everyone here on this call wants to help Stan to live at the Exchange Lofts, you guys will get rent. You just fund me. I'm open to it, man. But now I'm actually gonna go on over to some of the questions we've received, because I think it ties into this pretty well. So we've mentioned a lot of residential properties, and Clint actually wants to know, what are our thoughts on commercial property and what are the plans to invest in this via EP?
Yeah, sorry, who you said asked that? Clint
van Heerden.
Okay, cool. So Clint, I think one of the things that we've committed to do is to make the full gambit of property investment available to our community. and so that will involve commercial, industrial. It will involve us raising money to actually finance developments, the works. I think with COVID and everything that happened, we just decided from a risk point of view that, to stay away from all the commercial stuff. I think we've all seen in the press what's generally been happening in that space. But having said that, there are obviously really good opportunities. But our investment committee are quite kind of, I want to say ruthless, that's the wrong word, but relentless in the pursuit of mitigating all this kind of risk. So we have had a few commercial opportunities come our way, which we have not approved onto the platform. But without a doubt, we will look at that stuff. I mean, we've got an interesting one that we're going to be looking at soon, some micro warehousing down in Somerset West. There's some potential funding for a really cool development that we are looking at. There's a lot to follow. So the short answer is we've just focused on residential for now in this kind of particular time, but we will explore all different investment opportunities.
And speaking of exploring, Spamandla Maduna actually wants to know, are we only looking at getting properties in Gauteng, or do you want to spread throughout the country?
Throughout the country.
Without a doubt.
So yeah, I mean, we've got two down in Cape Town, the Rockefeller, which is going to be handed over to us quite soon, which is in the foreshore, which is a beautiful building. I think guys who follow us on social media would have seen some of the photos that you posted on how that development's looking. And we've obviously just closed that IPO of Black Brick in the Cape Town CBD. But yeah, we are definitely looking at other provinces as well.
Awesome. And now I want to jump into auctions because I'm getting a few questions about auctions here.
Okay.
Ask you, Rupert, how the previous... Okay, so actually let me start by just explaining auctions a little bit to our users. So guys, when you see something on EasyProperties that says available on resale in the market soon, that just means an auction, essentially. And we have auctions. Each property will go on auction every 3 months, so every quarter. And that means you can sell to other investors on EasyProperties, to each other, I guess. So not to other people outside, and it doesn't go to anyone else. It's just within this market we've created. And so, Rupert, I've actually gotten actually, before I get to the question, you have some insights for us on how the previous auctions had gone.
Yeah, I think, Stuns, if you don't mind, I'm just going to take one step backwards. I haven't seen the questions pop up, but I'm sure there probably are a few questions around how those auction prices are set. So maybe let's start there first.
Yeah.
And why we've got auctions there. I think we've been at pains to reaffirm with our community that property is a medium to long-term investment to enjoy the full benefit of the returns that we are looking at, the full capital growth, the full rental yields, all of those dividends. We want guys to stay in for the 5 to 7 years. Property like we're investing in is not like a REIT where you're buying and selling and trading shares every day. That's not the play here. But we understand that people do need liquidity, and it's one of the historical disadvantages of investing in property is that it's very illiquid. You and I, again, that unit we theoretically go and buy. If I get into financial trouble, how on earth do I get access to my money in a share that we own together? It's impossible. A, it's very expensive, and B, it takes ages to sell and transfer and get your money. So we understand that people do need access to their cash in the event of whatever emergency. So this auction capability was actually built specifically to give some liquidity to guys who need access to capital. Okay. So that's the first point. And then the second point is, again, it's not meant to be buying and selling shares and auctioning off your shares and buying at a discount. Obviously, those opportunities exist. But how that kind of pricing works, it's pretty simple. It's complicated, but it's actually pretty simple once the penny drops. Everyone who's looking to sell their shares places an offer on the platform. They offer 500 shares at whatever, R1.10, and everyone who's looking to sell will place their shares on offer. On the other side of the auction, we've got all the guys who are looking to buy into any of the properties that they might have missed, or they want to double down some of their investments. They really like a particular investment, and so they will place all their bids on the other side. What happens is that the algorithm kind of assesses all the volumes that are on offer, the prices that are placed on the bids and offers, and through all of that process, it works out where the most shares will be bought and sold. At that point, where the most shares are going to be bought and sold, that is the auction price. And that's not something that we've kind of created on our own. That's how the auction, intraday auctions on the JSE work. And so once that auction is set, and obviously as people are placing their bids and offers, that will change. But once the auction closes, that algorithm runs, and that's the kind of share price that occurs. And obviously, if you had placed a bid to buy shares that was beneath where the auction price is, you're obviously not going to be able to buy because the selling price is higher than that, and vice versa. If you offer your shares to sell at beneath where the auction price is, you will obviously, the price gets set higher. You will get that auction price depending on the volumes. It's all down to willing buyer, willing seller, that kind of thing. But I think there are a couple of YouTube clips that kind of explain that in some more detail. But that's essentially how that works. And then to come to the actual auctions, I mean, we held our first auction for 3 properties, and that was Green Reef Village, Rockefeller, and Black Brick in Sandton, our first properties that we launched with. Everyone will know that they bought their shares for R1. Obviously, what we do after the IPO closes and we take transfer of the properties, we actually then essentially reprice the property. That discount that we bought it for, it's now got a value on the open market, and that value is set by independent guys who value properties, but nothing to do with us. And therefore, if so the share price is then determined by the new share price is then determined by the value of that asset. Okay, so it takes into account that discount, and those discounted share prices. The share prices based on the discounted property, put it that way, were for Rockefeller it was R1.32, for Black Brick it was R1.11, and for Green Reef Village was R1.11. Okay, and then it just shows how this auction process works. Then we held those auctions, and guys placed their bids and their offers, and the algorithm ran, and the prices that eventually were set, the auction prices, it was R1.12 at Green Reef Village. It was R1.15 at Black Brick, and it turned out to be R1.16 at Rockefeller. And there were about north of 250,000 shares for each one of those properties that sold. I think what was really encouraging for us was that there was a far higher demand for shares than there were guys looking to sell their shares. But at least there was some liquidity there, some decent liquidity for guys who needed it for whatever reason.
Okay, cool. So then this actually brings me to a question that one of our users asked about auctions. I know I'm struggling to find it because when I noted it, it was amazing. Okay, now I'm going to skip on that one. But then, okay. So then, why would someone want to, and this is actually a question that came up, what is the benefit of investing in an IPO as opposed to investing in an auction, via auction? What's the benefit? What's the comparison between the two?
Well, in my view, the benefit of getting in the IPO is you get to enjoy the full discount of the property. So when we are buying those properties, at exchange lots, what did we say? It's a 8.8% discount.
Yeah.
You buying those properties at that discount, just looking at the share price that was kind of set in the auctions of these other ones, you're buying at a slightly higher share price per share. And so you're not getting the full benefit of that kind of discount. Although having said that, the Rockefeller, obviously on its net asset value, based on the value of the properties, as I said, was R1.31, and those traded at R1.16. So there was a bit of a discount there. But the other properties that have gone, that the original discount from the guys who bought in first was already priced in into that share price. So that's the benefit. The guys who bought in during that auction would have not got that first dividend, because that first dividend was obviously accrued to the original shareholders. They will get the second one. So that's the benefit of buying in the IPO. The benefit of the auctions as well is it gives an opportunity to guys who missed the first few properties, who really want to invest in those properties. Maybe someone really likes the black brick stuff, was able to buy in black brick Cape Town, but not buy in black brick Sandton. They get an opportunity to invest in some of those too.
Hundreds. Perfect. Okay, cool. And so I can see we're running a bit out of time now. So I want to just actually start going into some of the stuff that's happening on EasyProperties community. So right now, actually, we are running a few competitions. We're running 3 competitions. One of them is the free cash competition, which means that depending on the different bands that you're in, you could actually enter a draw to win 10,000, 20,000, or 30,000 Rand if you make your first investment into the Polofields. And another one, which is everyone's sort of favorite right now, is that you could win a weekend at the Blythe Villa. So as you know, we are invested in the Blythe. It's actually a property that was listed on the platform. And we are saying to people, if you made your first investment on EasyProperties, I forgot when we launched it, but up until the 9th of July, and you're making your first investment in the last week or so, within the last week until the 9th of July, making your first investment on EP, you enter into a draw to actually win a weekend at the Blythe with 7 friends. It's a villa, guys. It looks amazing. Unfortunately, I didn't have the opportunity to test it out myself, but I'm speaking to Rupert and our friends at Narrative about that so we can address it. And yeah, those are one of the competitions. And lastly, we've got a 50 Rand bonus for people who are part of Easy Equities and still have not activated their EasyProperties account. If you're from Easy Equities and have not activated your EP account, you could, we will essentially match your 50 Rand deposit into the Polofields when you make your first investment or subscription for shares on EP. So big incentive for a lot of people, especially the newcomers, to get invested in EasyProperties. And so that is just my shameless plug on campaigns and stuff like that. I want to go back to the questions from people, Rupert, because now
Lekker. While you were chatting through those things, I was just scrolling through 1 or 2 of the questions. So I've got 5 here. I see an old friend of mine, Denise, is on the call. Denise is a property journo, an old friend of mine. We worked together a long time ago. And she was asking around investors. I think what's lekker, Denise, is while I've given those overall investor figures on Polofields, again, we've got 10 units there that we are raising for. We have got over 11,000 people that have invested in 10 units. And if that's not democratic investing, then I don't know what is. So that's the one. Someone was asking about tax benefits. There are tax benefits, certainly for some of our ones down here in the kind of CBD. There's some huge tax benefits there. If you have a look at any of those prospectuses online, and there's kind of figures there, and it also brings up one of the other questions where someone was asking about projections. It's really important in the prospectus Andrew Hartog, who's part of EasyProperties and a brainiac. He kind of puts together all these financial models. And in there, he's got projections for someone who's invested 10,000 Rand. It gives you projections on what you're going to earn year on year over the 5 years. It gives you information on some of the tax benefits of CBD and urban investing. And as well, it shows you what returns you'll get at the end of the 5-year period. So make sure you check out those prospectuses where those figures are. That kind of stuff's there. Someone asked around protection of losses. And I think that it's a really good question. It's one of the reasons why people really like investing in property. Obviously, that no investment is 100% secure. But the simple fact of the matter is, at the end of the day, you're investing in bricks and mortar. And so while the property market obviously goes through its cycles, you're not going to have it. And I've invested in some EC10, and it keeps me awake at night. I look in the morning and the Bitcoin's tumbled or it's gone through the roof. And actually, I've decided that stuff it's too volatile for my specific DNA. And so that's one of the reasons what's fantastic about investing in property. It's solid. It's investing in bricks and mortar. So even if at the end of the day, we decide to sell one of the investment units because whatever, there's the rental market's not going great, we still got that asset to sell at the end of the day. And so, while you can always make a bit of a loss, it's generally considered a safe investment from that point of view, because you're just investing in the bricks and mortar, which never disappear like some random, I don't know, Bitcoin stuff that goes up into the atmosphere. But maybe I'm showing my age there. So those are a couple of questions I just kind of jotted down. Stones, any more you've got?
Okay. Last ones, because I know we have to be out. So 2 more minutes, guys, and I'm going to ask.
No, well, let's go until 10:02.
Let's go to 10:02. Okay.
Yeah, let's try get a few questions in.
Are any of our properties bonded? That's from Peter Bullock.
Yeah, they all bonded. Each of the properties that we put on the platform, we raise 70%, and we bond 30%. And that's specifically just to give guys, again, one of the benefits of investing in property is the access to gearing. And the idea is that you get capital growth from the bank's money and get a yield on some of the bank's money. So there are 30% bonds over all of the properties. And one of the properties that's coming up quite soon, it's an international property. That one obviously won't have a bond. We'll raise 100%. But we're actually looking at different mixes of capital and debts going forward as well.
Awesome. Okay, great. And then another question from Mangoba is, will EP expand property portfolio beyond SA borders in the future, or are there any talks about such an expansion?
Well, yeah, there's this international one that we are hard at work putting together, and hopefully we're going to bring that to the platform within the next month. But yeah, so there is plans for international property.
And then I guess that also answers your question, Kevin. I don't know how to say the surname. Purvis is. Can you talk about the upcoming investments beyond Polofields? And I think you mentioned it there. We're in the chats about it, and international. We're looking at it, but we are still working on it.
Yeah, and that's another name I recognize too.
Okay. Oh, awesome. This is actually great. So. Someone is asking, Hegel, I don't know how to say his surname, sorry, Hegel, and we're running out of time, so I'm going to say Hegel is asking, does moving the rental management in-house increase the cost savings and ultimately margins for investors?
Yeah, so what we've done is we've benchmarked those figures. So we still bringing it in-house. It is going to save money against what the kind of general market out there charge. The original rental management guys that we had weren't actually able to honor yeah, they got into some trouble, and so they had to kind of give back our portfolio. So those particular ones we will do manage at the exact same cost as what they originally were going to charge. So there's a preservation of the yield there for our investors. And going forward, we are doing it probably at half the cost of what you can get out in the market. So it's of benefit to our investors.
Okay, great. And then we've got a question from Tepo, who's saying, are we essentially asking about the 5 to 7 year period? Can people invest longer than that, actually?
Well, so it's part of the stated investment period for each of our properties. So at the end of when we get to one of the end of those investment periods, obviously, as shareholders, there's a view that shareholders need to take, and there will be some kind of a vote. But I think what we will, so the investment will end at that point, subject to obviously shareholders and director kind of approval. But the opportunity may exist. What we may do is sell, obviously if we're exiting an investment, it's a sale out into the market. Potentially what we can do is sell an investment back into the EasyProperties community to kind of go on with that investment. So there are options for people who want to invest for longer periods.
Okay, great. And then Spartley, I can see on the side, is asking, can under 18s invest in EasyProperties?
Yes.
And in fact, one of the youngest ones wasn't born too long ago, I believe. I think one of the youngest investors was born like a year ago.
Yeah, we've got 98 investors who are under the age of 2, whose parents have opened an investment account for them and have just put away a little bit of money, $100, $50, whatever the story might be. We've got 98 guys under the age of 2 who have got a little share in 100 units. How nice.
That's super awesome.
Yeah.
And what Abila is asking, is this webinar only about EasyProperties? Yes, this is exclusively about EasyProperties. And then I think I'm going to have one last question, Rupert, before we start to close out. And that's essentially, where is the question now? Okay, I think we actually answered it then, because I'm not seeing it anymore. So one of our users asked, are we fixing or are we addressing the oversubscription issue? Yeah, are we sort of addressing this oversubscription issue? Which is,
yeah, it is a bit of a friction point, but having said that, that is how IPOs work. The way that we're going to be able to address it going forward is when our community gets a bit bigger, and we will have shorter raise periods. There's, unfortunately, with the CIPC, you've got to give a start date and an end date to any IPO. And it's, if you hit 100% and you decide to close it, you've got to file supplementary prospectuses and the works. It then gives an opportunity for people. You have to give them 20 business days to cancel their trades, and that is considered a material change in an offer. So the way that we will have to address it in the future is when our community grows to even more than the 83,000 or the 24,000 invested people, it's having shorter IPO periods.
Love it. Love it. Okay, cool. And I think that actually brings us exactly to 10 minutes too. Any rounding off statements from you, Rupert?
Yeah, I see there's a question here just around the dividend calendar being updated with 7 on middle. What we only put those, obviously we pay dividends every quarter. As soon as those properties register into our name, then we know what dates the quarter will be. So as soon as those properties register, we will update those dates. I actually went and signed the bond documents earlier today at the bond attorneys. So hopefully that will, I see someone saying they met you all those years ago. You must have been a baby somewhere. But yeah, so we always update the dividend calendar on the date that we take transfer of the properties, because then we'll know when the quarter is.
Okay, makes sense.
Yeah.
Makes sense. Okay, cool. And then last, I want to answer a question from Smoothie. So one of the first questions we actually got was, can he treat it like a holiday home? Not quite, but for instance, the Blythe has been listed on Airbnb. So if you go on Airbnb, look through the Blythe, we actually have our properties, or one of our properties or two listed on Airbnb.
Yeah.
3. Nice.
Yeah.
That's nice. So we've got 3 properties listed there. You'd be doing a great service to our community by going out, having fun at the Blythe, and registering or booking an apartment there via EasyProperties.
Absolutely. So, go stay in one of the places that you're a shareholder in. I think as we get further and further afield from Joburg, some of the Cape Town properties, we might Airbnb some of those. Then it's a wonderful opportunity to go stay in an apartment that you own a share of. Very lekker.
Awesome. Rupert, I would say thank you for this. And I just want to say to our community as well, before I let you round off, Rupert, that we had so many questions, guys, and we tried to get through them also. I think we're going to make this a more regular thing, guys.
Yeah, totally.
I think we should have more webinars with you guys, asking great questions. And I really love the engagement and energy we're getting from you guys. So please look out for those emails and join the webinars when you can. Rupert,
Stones, I think we need to publicly commit to having a webinar at least every single time we launch a new IPO. I think it would be a nice opportunity to talk a little bit through the property for people. And obviously we're getting new guys all the time. So some of the questions, while we addressed them a year ago, I think once a month minimum, we'll have one of these webinars, and let's just time it around events that are taking place. As a new property goes live, as dividends are about to be paid out, let's do that around there.
Deal. I'm in. I'm in. Love it.
Lekker. And somebody said Easy Equities was greater than EasyProperties. Find that person. If that was Lesedi, it's over.
It's probably Lesedi or Carl or something.
Yeah, exactly.
Or Charles actually, but whatever, it is what it is. Cool.
And that's
guys.
Also, I love that. Patricia Ploy, first time investor at the age of 50 something. Congratulations. I love that. I mean, one of my favorite, and maybe this can be a kind of closing comment, but one of my favorite things when we first launched EasyProperties was someone reached out to us. It was a family of 3 generations, kids, parents, and grandparents. And those guys invested, I think it was into Green Reef Village or Black Brick. I can't remember which the specific property was. And it was the first time that anyone in that family had invested in property. And it was all 3 generations at once. And that's how epic that is. So, yeah, it's very lekker.
Love it, man. That's so cool. All right, guys. Thank you so much for joining this webinar.
Stans, I think let's take down some of these Q&As and the questions and chats, and we can we can post some answers to these questions on Facebook and Twitter and all of that.
Yeah, we get these questions afterwards, Rupert. Don't worry about it. We got that.
Okay.
Awesome, man. So big shout out to everyone who came through today. Guys, we're going to have more, as you heard right here. We're going to have a lot more webinars coming through. So please be patient, ask your questions there as well. Engage with us. We love this community. Thanks for everything, Rupert.
Thank you, Stans, and thank you for everyone for joining. It was terrific.
Cheers, everyone. Have a great pre-weekend. Happy Youth Day, guys.